Today I'll be showing you guys an easy option strategy that you can do on a stock that you think is going to stay stagnant or rise. For this example, I'll be showing you guys on Ford. So we'll come over here and we'll go over to Ford. And so we're going to come over here to trade Ford options. But first, be aware of how to always exit an option strategy before you get into one. That's probably the last thing that you want to happen, is you want to exit it maybe a little bit sooner than the expiration date, and you don't know how. So be aware of that. And with this one, we are also selling as part of this option strategy. So there is a risk of assignment. So I would learn about that and how to counteract that. So for this first piece, we're going to sell a put. This option strategy is called the Jade Lizard, and so the first part of it is we're going to sell a put underneath the share price. So we're going to sell the put right there, and then next we're going to sell a call. Now we're going to sell a call one above, so that way the call that we sold and the put that we sold are straddling over this share price line. And then for the last piece, we're going to buy a call one above those two. So it'll look something like this. In a way, in some options, you'll see where this is a profit zone. So you'll see that this will be green, it'll plateau right here, and then it'll come down, and even to the right side, it'll still be a profit zone. You can see to the left, though, you don't want Ford to drop, and that's why I would only do this for something that I know is going to start to rise. Let's say news came out about a certain stock, and that's where you think it's going to rise. This is when you would use this. So really you want to get it to either rise or trade pretty flat is your ideal goal. I'm going to show you another setup where it'll actually can maintain a profit to this right portion here. This one's much more expensive, so we're going to go over to Tesla, and so we're going to trade options here. Same thing, and like I said, or I forgot to mention earlier actually, you're going to want to pick an expiration date dependent on what you think is best. If you want it to expire pretty soon because your stock is in the correct price, then obviously yes, that would make sense to pick something soon, because the more time you give it, the more time you allow for the stock to move out of your desired price range. So like I said last time, we're going to sell a put right underneath, sell a call one above, and then we're going to buy a call on top of those. So this is the other setup that you can see where it'll stay green on the right side, and so it just kind of changes a little bit depending on from stock to stock and the expiration dates. So this one makes a lot more money, and you'll see as long as Tesla stays above 786 before 6 days from now, the expiration date, then we should be good. Obviously this is going to be much more expensive to put into place, and you're going to have to put up a lot of collateral in order to be able to go through on this. But we're going to go back to the Ford one real quick, where we can set this up, and then we're going to go over to option strat, where I will show you what you should look at before putting options into place. So we're going to reset this up, and then we're going to buy the call. So that's set up like that, and we're going to go over to option strat to visualize this a little bit better. Come over here to build the top of the screen, and come underneath the other tab and click on Jade Lizard. So now we're going to copy this right here, we're going to put it into option strat. So the first thing we did is we used Ford, so make sure that's correct. Pick the correct expiration date, we chose July 29th, and then we're going to do our 12.5 put first that we sold, 12.5 P for put right there, and the selling is on the bottom. We sold the call at 13, and then we bought a call at 13.5. So if you want to play around, you can spread this out. Definitely, you can spread out the like the gaps between them, but you definitely want to have the put that you sold underneath the share price, and you want to put the call you sold above. But other than that, you can kind of spread it out a little bit and see how things change. Like for example, you can see if we bought a call a little bit higher up, you can see how that'll play out. We'll come over here though, and you can see this is why I like option strat, because you can visualize this a little bit better. You can see exactly where Ford has to be at what time, what day of the week to see your profit or loss. And you can also play around with the implied volatility if you'd like to, but we'll just reset that to what it is now. And yeah, so other than that, I like to set it up so I can visualize this a little bit better, because obviously Robinhood doesn't show you very much. This is just what it'll look like on expiration date. But other than that, you can visualize this a little bit better. If you have any questions, be sure to comment them down below. And if you enjoy other videos like this one, be sure to check out my channel for more. And yeah, thank you for watching.